let's go over Bitcoin. What I actually want to do really quickly is just go over the large time frame of Bitcoin, just kind of recapture where we think we are in a larger grand scheme, the greater grand scheme of things. So this is the price history of Bitcoin. As of right now, I am in the I've been pretty stuck to this count. I really don't think there's any way to look at this. There's another way we can look at this, and we can discuss it here really quickly. But this is what we've been basically studying so far. A wave one, two, a wave three, a wave four, and a wave five. Nice, clean 5 waves. Well, maybe this one's pretty pretty tricky, but still overall, when you look at the overall structure, 5 waves up. We could probably say this is a 1, 2, maybe a 1, 2, maybe another 1, 2. I would say this is only likely if we did complete this move as a W, X, Y, X, Z, meaning this move is done. Because remember, we basically have 3 scenarios that we've been tracking here. We've been tracking one scenario, which is a WXY double zigzag. And this is pretty much what we're actually monitoring right now. This is pretty much our primary counts, an X flat. And then after this flat is done, either we have one more push up or it's done already. And we'll discuss this here in a moment. But we're looking for another 3-way move like this. So this is really our primary. There's potential that this was a 1, 2, 3, 4, 5. Then we have an A, B, C. Then a 1, 2, 3, 4, 5 for one of our scenarios, an A, B, C. And then once again, there is a second scenario, the WXY. W, X, Y, X, Z. Meaning the move's done, it's to the moon. We're never coming back down here again. So if that's the only way I could probably say we completed a large 1, 2, 1, 2, 1, 2, is if this move was complete as a triple zigzag, because it would make sense that we would be in a large 1, 2, 1, 2 if these corrections were pretty much similar in time. Because usually, like I said, like with our like we just went over with 1, 2, 1, 2s, usually 1, 2, 1, 2s, they're similar in structure and time and strength. And these do, it has a nice push up, a nice 3-way move back for almost a year. A nice push up, a nice 3-way back for almost a year. A nice push up, and same thing, almost a 3-way variation. This one would have been a triple zigzag, but pretty much right there exactly on a year as well. So they all would have been about a year's long correction. That's the only argument I would have if this is a 1, 2, 1, 2, 1, 2, a large triple 1, 2 setup. Invalidation obviously is breaking the low that was created at 15 or so around here. But if we start to continue making bullish market structure, meaning this is a wave 1 into wave 2, up for wave 3, 4, and 5, then we probably would look at this differently, saying, yeah, we're in a large triple 1, 2 setup potentially. But even then, I still wouldn't be convinced. I would be more convinced that we just completed a cycle, just like we're seeing right here, until we have more evidence. And really, the evidence wouldn't come until very late in the game, unfortunately. But no matter what, you would still expect a strong push, because even if we completed the cycle 2 right here, we're looking for a cycle wave 3. So no matter what, you would still get a strong push. It's a matter of just how that push plays out and how strong of a push it goes up. Because usually 1, 2, 1, 2s, they push up a lot stronger than just a normal wave 3. But as of right now, this is pretty much what I'm seeing. And if we pull up the correction times again, if we do think that we have just completed a cycle, and if we look at the primary degree cycles, they're about a year long. So if a degree higher, meaning a cycle degree, which is this one, we'd want to see it be larger in time than these primary ones, almost double in time. If we doubled it in time right here, this is pretty much what we get. And it kind of lines up with our expectations right here with what we want to see. So when we're looking at this structure as a 1, 2, 3, 4, 5, we're seeing this as A, B, C for a zigzag for wave W, an A, a B, and a C for a flat. Either that C is done right now or the C has a little more push up right here. But regardless, we'll want to see another A, B, C move play out. And we want to see it kind of be almost double in time the prior corrections to kind of give more credence that, hey, we are in a cycle 2 correction instead of a triple 1-2. So this would kind of help cancel out that triple 1-2 idea, but it also just falls in line with our expectations regarding time, how time will envelop with this whole structure right here, this cycle 2 structure that we're looking for. Now, taking it down to the smaller time frame, there's basically two ways that I see this. Let's take a look at the first way. We can either say that wave 5 is not done. We still have this push up to come. Whether it forms as an impulse, or whether it just forms as a diagonal. There's always potential for that. We just don't know. It's a little too early. But this is basically saying that wave 5 is not done yet, and we still have a push up to go. We do have some areas of liquidity up there that we're looking for regarding weekly areas of liquidity. And then even if you take it back to a basic market structure point of perspective, just like how we were with the larger countess too, we have prior support right here, breaks through, and just typically from market structure, you'd want to see, prior support become present resistance. So it would just be a nice market structure flip on top of that. But everything lines up with what we're expecting because we are seeing a B, C move here. But if this move is already done, meaning this wave 5 is actually right here, this is pretty much how I see it. So we have this wave 5 completed right here, wave C of wave X, and we're in a 1-2, 1-2, 1-2 setup. There really is absolutely no other way I can see this at this point. I've looked at it a few other ways due to how corrective it is, but how some structures are impulsive. It's really, like I said, the only way I can see it is a 1-2, 1-2, 1-2, or this is a W, X, Y, and we push up for the wave 3, for wave 4, for wave 5. The only confirmation we have right now is the extremes. So if we break this low, it's very likely that we are validating this count. And if we break the highs up here, obviously it's complete invalidation that we'll be looking for the 3, 4, 5 up here, the rest of the move up here. But typically this is kind of what I'd want to see with expectations. See it's have a nice clean market structure shift, start unloading these 3-4s and 3-4s, which will be a lot of fun for us, which is what triple 1-2 setups do. But we'll pretty much want to see it push down. I'm not sure how far it would push down. We'll have to wait until these wave 3s end to get a better gauge on that. But this is pretty much what we'll want to see right here. We'll probably see a long wave B. And once again, the only true validations that we have on these counts right now is just breaking the price extremes that we currently have, meaning breaking this higher low or breaking this higher high right here. And then once again, right after this, we want to get that A, B, C. to finish out this Y leg. And we're still looking for that 10 to 12K zone right here. Looking at this right now, I can't definitively make a decision on if it's bullish or bearish, meaning if we're in it's completed or not completed. It's not very clear. The only thing that's clear to me right now in the short term is expecting another push down and breaking this low. I think that's extremely clear because I can't get this to end cleanly, really on any any way or any time frame. So even if we're in the move up is done, the move up is not done, I'm still expecting to move down right here. And that's where things get tricky because we're getting so close to invalidation points. But sometimes breaking that point right there is something that we need for more confirmation in our idea if we're looking for up or down. So currently the only thing I can confidently say, like I said, is a push down, and then we'll have to monitor it after that. Meaning if we get a push up like this, we'll probably be looking at this where this is a wave one, this is wave two, and we're going to start moving up for wave three and wave four and five. The only thing I don't like with this is just how extended in time wave C is becoming. So when we're looking at A, B, C, when we're looking at the C leg right here, it's almost approaching double the length of wave A, meaning usually at this time is when you want to start seeing a trend reversal. Once again, it can definitely go up to the 2.618. It's not impossible. We don't like to see that, but it's very possible because this is pretty much the maximum time frame that we would allow for wave Cs typically. So the only thing we don't like about wave 5 not being done is just the time aspect in comparison from wave C to wave A. That's the only thing I don't like with it personally. And then once again, if we don't create this bullish market structure and we get a push down, actually this one's gonna be tricky because even in our 1-2-1-2 setup, when we push down, we're still gonna be looking for another push like this, another two. So I think breaking this will be a clear indication here that's we're in this count that we didn't complete the move up. Because like I said, if we are in the 1-2-1-2 setup, we really want to see that prior to be protected right here, this prior to. We don't want to see it go beyond that, this point right here. That'll be another early indication that this is incorrect. When it comes to S&P, there's two main counts we are still monitoring. There are obviously different ways you can view this, but this is the ways that I am viewing this, the way that I think is the most valid and has the right look and structure, which is we're still completing a wave C, where we just completed a wave one, bouncing up for wave two, and we'll come down for that 3, 4, 5. We were looking at this two different ways. We saw this as a 1, 2, 1, 2, or a 1 into a 2. The only validation that we had really was just continuing to pump up and moving up, and looking at the strength of this, it's very evident this is a pretty impulsive leg. I don't think you can get any more impulsive than that, really. So breaking these fours as well, because we do have these cascading fours right here. Always breaking these fours, these lower degree fours, is another indication that we've completed this move, that this is a completed impulse right here. So given that, we're now looking at this as a wave A, and like I said, we're looking for a move back for a 3 move for a B, up for a wave C. This wave B can definitely just extend in time. There's no doubt about that. So just keep that in mind. It could really just extend in time because that's what wave Bs do. So it could do something like this potentially. But when we look at average time frame of completions for minuet degrees, these green ones right here, and looking at the prior ones, we typically want to see it kind of fall within that same time frame completion. But we're aware that this could extend very correctively. But as of right now, we're looking for a three-wave variation move here for a wave B. The second way we're looking at this is bullishly, that we are not going to go beyond this point and that we're going to continue up. Nothing's really changed in the short term. The only thing that's different is the long term. We're long term bullish on this counts. Everything's the same here. We have a 1, 2, 3, 4, 5, and we have an impulsive move up, but instead of a wave A, this is a wave 1. And then we're still expecting a corrected move back for a wave 2. It's just a matter of how strong this wave occurs. If we break this point, we'll probably have to ditch our bearish counts or just look for bearish alternatives and potentially upgrade this to our primary if it breaks this points. But if it just moves up like this, then we'll take a look at this as an A, and then a B, and then a C right here. Now, it did kind of fail to meet my expectations because originally we wanted it to come to this point right here at least, this 0.618 to the 0.3414. It didn't do that because characteristically with running flats, they will hit the 0.618. There is a chance it will hit the 0.5. It is kind of rare, and it did hit that as well, and it did hit the a wave 2 retracements. It's very rare for a wave 2 to also hit a 0.272, but they are struck. The structure is valid. There's nothing invalid about this. It has the right look overall still. So to me, this is still a valid structure, and I would still say this is a complete running flat. If we started to come down, we'd probably have to look at the bearish count and continue with that as our primary. So as of right now, I think we can go ahead and just get rid of this because, like I said, to me, it's evident that's based off of structure and just looking at this A, B, C. It it's a little unorthodox with how weak the C leg is, but it satisfied all criteria. The structure is still there and valid, and it may not have the best look for running flats, but it still has a running flat look. It still has that running flat look right there. Like I said, we would have liked it to at least extend a little further down, but nothing's perfect. But given this is pretty much what we'd want to start looking at right now. And then we come back to what we have is wave degree confluence or directional confluence in the short term. Because like I said, we have an A or B or a 1 or a 2 into a C or a 3 here. So this is pretty much what I'm seeing right now currently. Once more price action develops and we can use that and observe it more, then we can make more decisions, more rational decisions. But as of right now, like I said, these are two main counts that I'm tracking. We are aware of another count that we do have, such as the triangle. And like I said, we're not putting too much weights behind this one, but it's still there. It's still on track. It's still there because even so, we have an impulse down for an A, looking for a 3, we move back up for a B, and then for a C. The only thing I don't like about this is that we're expecting this move up like this to kind of occur like that. Usually it's not typical for triangle subwaves to kind of come back to that trend line like that. Usually they'll start trending away from it. So this might be invalid just based off of just kind of structure, but it's still valid. I just don't think it's very probable. That's why we have it in the back burner. As of right now, I still think it's more probable that we are in the bearish counts. And then second most probable is that we are in the bullish counts, the one that we've been reviewing right here, right here, where it's time to move up. It's time to start a new bull leg up. But that's what I have for S&P and Bitcoin. And if anybody has any questions for me, I'll definitely take some questions right now and I'll take a look at the boardroom. So if you want to go ahead and post any questions you have, I'll definitely take a look at them. But these are some daily levels that I'm really taking a look at for rejection up here for ES, and I definitely want to see it at least hit somewhere towards this golden pocket zone or the 7.9 or 7.86. But I'm just monitoring these daily levels right here for reaction. So we'll see A, B, and a C. And if we think this A is done, let's see, where did she end? Right there. We'll see that we can probably find some type of fib confluence too, at least. So typically we want to see at least hit the 1.13, so that's something we can look for. So at least falling right in the middle of this golden pocket, right into this new week opening gap. So that'll be at least the first target. And then we want to start looking for the bearish market structure playing out. Or, it continues up here. And then we start looking for the bearish market structure play out. Might even have to move this over. Where we had a quick break of structure, and then a continuation move. I just don't like how long that 4 would be proposed to this wave 2, though. It'd be kind of a little too long, and it'd be getting a little too deep, too, for wave 4. So, I mean, it's already pretty much went beyond the 0.382. It would be approaching the 0.5 potentially. But even then, like I said, it's just a little too extended. But honestly, I can't really get this to start impulsively either. Like, it's kind of you're really forcing it as a 1 into a 2, but there's really no other way to kind of really count that right there. That's really the only way. Yeah, this one's tricky right here. When we were in the Xmas range, when we thought we were in wave 4, I remember you were always saying it was starting to get too long in time. How do you evaluate wave 4 compared to wave 2? I mean, there really is no way to do it. I mean, wave 4s, they can they can end. Yeah, this is a difficult question to end because you never know when a wave 4 is going to end. It could be a double combination, even a triple combination. Really, there absolutely is no way to know besides market structure shifts, like extreme market structure shifts, and hitting certain highs and lows. The only reason I was saying it's getting too long is because I'm looking at it in terms of wave degree. Because I'm saying like, oh, like, hey, if we're in a minuet degree, it shouldn't take this long. Usually minuets take on average this amount of time. So it's usually kind of like discussing wave degree and comparing degrees of prior corrections, and if it exceeds those correction times, then we're saying, okay, this might be another degree. Like we might have to bump this degree up, or that this is something completely different. That the wave 4 structure that we're seeing right now, it might actually just be a large wave 2 of something else. So it really just helps you understand that it might be some structure completely different, or it's a different degree than what you're observing. And in hindsight of that pie, I'll go ahead and we'll go ahead and just end the stream here. And if you do have any questions, we can just continue to hang out here. I'm happy to discuss any further questions that anybody else has. And once again, as I always say, you can always message me publicly or privately, either be any kind of technical questions or market questions or trading questions, whatever it be. Feel free to just message me publicly or privately. But thanks for showing up, and I'll see you guys next week.